The infinite banking concept, the B, obviously, there, banking, has all kinds of connotations today in our society, all kinds of understandings. Well, from an IBC authorized practitioner standpoint, let me tell you when we talk about banking, what we truly mean, okay? Now, Nelson often said that all money must live somewhere. So your goal is to find what's the best warehouse that your money could actually live in. We want your money to live in the place that's got more benefits than any other capacity or any other type of warehouse or system, right? So when you go to your bank, you drive through the drive-through, right? And if you've got $1,000 in your check, then you would go through the drive-through and that would be your deposit, right? Then you get a deposit credit for $1,000, right? That's just the way it works. Well, in the privatized banking situation or in the infinite banking concept, IBC, it doesn't work that way. Okay, there is a cost of insurance. There is a cost to building this banking system. It's largely front-end loaded, so most of those costs come out in the beginning, but it starts off like this in year one. If year one, you put in $1,000, you would get a deposit credit of about $600 to $700. Now, when I say a deposit, I mean an insurance premium cash value, okay? This is insurance premiums going in. This is cash values credited on the account. I'm just giving you this analogy so you understand from a banking perspective, because it can be used like a bank. That's not a stretch. You can use it that way for large purchases that you come across in your life. So year one, you put in $1,000, you only get a credit for $600 to $700. You say, well, Scott, that's not as good as my regular bank would give me. That's true, but your regular bank doesn't have all the insurance benefits, doesn't have all the collateralization benefits, doesn't have all the tax benefits, doesn't have the creditor protections, doesn't have all those other benefits, right? But in addition, hold on, it gets better. So in year two, you put in $1,000. Let's say that's your, and this could be $1 million, 10,000, 100,000, whatever. I'm just doing this to make the math easy. You'll get a deposit credit for about $850. In year three, if you put in again, if your premium is $1,000 in a properly structured banking system or banking whole life policy, you'll get about 980 credited in year three. See how it's getting better? From 600 to 850 to 980. Year four and year five is normally where the magic happens. In year five, if you put in $1,000, you'll get a credit for 1,050. It actually starts, it's actually higher than this. By year five, if you put in $1,000, you're getting a credit for maybe 1,100. And it goes up from there, all the way out to year 10. If we extrapolate this, you put in $1,000, and in year 10, you're getting credit for about $1,500. Okay, so it catches up rapidly. So the premiums that you pay and the cash value that shows up, most whole life policies will go years and not show any cash value. Let me just give you kind of a real quick example. So what will happen in many whole life policies is you'll pay into this thing for 3 or 4 years. So here's how that works. You would pay year one, you would have zero cash. You would pay year two, again, zero cash. Sometimes year three, zero cash. By year four, you would have a dribbling of money showing up in there. With ours, your cash shows up immediately. The very first year, the very first day, in fact. And then it continues to climb rapidly all the way up to more. Scott, how high will that grow? That's a good question. It depends on how long you keep the account. It can be, you put in $1,000 in premium, and your cash value for that 1 year, that 1 year cash value credit or growth could be $3,000 or $4,000. So this system is powerful. When it comes to banking, that's where we shine. Okay, all your money's got to live somewhere. If that's the case, then why not find the best warehouse of wealth that you could possibly find? We believe, in our humble but most accurate opinion, that the best place that you can put it is in a properly structured banking whole life policy, something that we call IBC, or the infinite banking concept. Other people refer to it as privatized banking. There's nothing as strong as this in the United States economy.